Lina Osman, Managing Director and Head of Sustainable Finance at Standard Chartered, and Luay, Ahmadi, Chief Investment Officer at Lamar. Please join me on stage. Thank you. And thank you, Luay. I'll start with probably the opening question, the Q1. Everyone would like to know the answer for, and this is when it comes to sustainable finance. It has been gaining traction. We've seen that in the news. I covered this in my CNBC stories as well. But when integrating philanthropy, and this is the fourth P today we're talking about, it adds a new layer probably of complexity. How, as a banker, you are trying to navigate this?
Thank you, and great to be here. Thank you for having me on the panel. Look, I think philanthropy is really interesting and very important. So there are two ways that I would look at philanthropy. One part of it is so where I sit within the bank is kind of on the side of the business that looks at sustainable finance solutions and ideas for clients, how they can tap into that market, and looking into that doesn't just mean that you look only at the kind of the private sector business opportunity to where you're providing that financing. One aspect of it, just to kind of complete the PPP side of the equation, is looking at how you can navigate the public sector as well and bring them on board. The other aspect of it is philanthropy, which is really interesting because if you work together with philanthropy on different levels to make projects more bankable, a lot of the new ideas, a lot of the kind of smaller entities that are coming out of different shoots in the world that are coming up with ideas around how we decarbonize. All of these scientific innovations around whether it's marine, carbon capture, the different ways of doing it is really interesting. But how do you kind of assist them to kind of make their projects bankable and then scale it up is a side of the business where we sometimes use the public sector to help out, but on the philanthropic side of the business, that's where you can kind of come in and do quite a lot of the work on the initial kind of groundwork on technical assistance, on providing that funding, that initial funding to do initial projects, test projects, etc., that will kind of test out the model, see that it works, and that provides extra credibility. So that's kind of one side of the business where we can utilize that for our own, where we can come in as a bank and provide the right level of financing while ensuring, the credit risk and the bankability of the structure. The other angle of it that I want to touch on is where we play a role in navigating or not navigating, but where we are contributing from a philanthropic perspective to certain projects that are aligned with our sustainability objectives. These include things like, for example, women in tech. We're sponsors of one of the sponsors of Earthshot as well. So we look at these things with very specific, in a very specific way, to identify how we could forward the objective of sustainability and how we drive it as well.
Awesome. Luay, let's go into Saudi Arabia. And this is where the main hub is now when it comes to business for Lamar. And if I would like to ask, how are PP models today being utilized over there?
Well, the PPP model in Saudi Arabia and its utilization is fairly new compared globally. We are seeing a very aggressive target for 2030 for Saudi Arabia's meeting various goals which they have, and they are heavily dependent and utilizing the PP model as its fullest. We are seeing companies like Aramco develop their own PPP program, which has been very successful, both not only in housing and hydrocarbons, but also in aspects which are environmental, such as decarbonization, desulfurization, and aspects like that. The national privatization program is concentrating as well on the, shall I say, the usual social infrastructure program. So schools, hospitals, now we're seeing roads being introduced as well as part of the PPP, which was not seen in the past. So the only way for Saudi to achieve these mega targets, which they have, is to both have a public-private partnership to support and grow the industries where they're focused on.
Awesome. Lina, you being in finance and now focusing a lot on sustainability, where do you see this kind of intersection today between both, especially when it comes to, and this is what we're talking about in the whole conference, climate projects?
So the very interesting thing, so first of all, PPPs and philanthropy has existed for a very long time, right? It's something that banking has existed for a very long time. I think the different kind of angle that we are coming across now is the fact that, you know, you're following the money. So if you look at where the money is being allocated, it's being allocated more towards this whole climate initiative, this whole kind of social initiative, and other aspects or sub factors or subcategories of sustainability, including things like adaptation, including things like even the carbon markets and how capital is being allocated by the providers of capital, whether it's equity, fixed income, lenders, etc. You're seeing a lot of capital and funding that's being committed towards these types of projects. Now, the intersection is then happening with, bringing in, I'm a banker through and through. I came into sustainability about 3.5-4 years ago, and I started looking at how we could look at, providing that aspect of financing or structuring of transactions that provide or that direct capital and mobilize capital in a scalable way towards these types of projects. We wanted to do more of these transactions. We wanted to do more of these deals. We wanted to kind of push our clients towards more sustainable projects, because their success in that leads to our success and meeting our objectives from a sustainability perspective. So looking at our story, it's very similar to the story of many other capital providers. Then you kind of look at, it's not just lenders or even kind of private equity, for example, that's looking at that. You're also looking at governments, and that's where the public sector is playing an extremely important role in combining their power with the private sector to scale it up. I'm not saying it's perfect. I think there's a lot more work that needs to be done to make it more efficient, but we're on the right track, I think. If I had a wish, it would be to kind of make it move faster. If we look at the philanthropic side, I think there's a lot more that can be done in terms of that coordination angle, to kind of look at how do we bring them in on some of the early stage transactions or the early stage projects where we need their help to get a project started, and where we are probably kind of working hand in hand from the start, to make sure that we are providing our views on how to make something structured in a way that is bankable, including bringing in the aspect of PPPs, offtake contracts, etc. And how do you secure those? I think that's where it becomes, you see that intersection of things playing a role.
So then let me take this question to Luay then, and being in this region, in the GCC, we know there's lots of family offices, lots of them, they do want to do philanthropic work. How do we get them at the startup phase of these projects?
Well, let me take a step back. Firstly, the most important partner on all of these projects is not actually the equity, it's actually the banks.
The banks.
So how do we make international banks more interested in allocating more liquidity into the region is a vital part of this entire equation. Equity today, there's always interested parties on equity returns in regards to the long-term nature of them. But with current interest rates where they are and the yield provided on that equity, it is becoming slightly more challenging. to attract substantial amount of equity where we sit today.
Especially when it comes from banks, because they usually come at a later stage.
No, the senior debt that comes from the banks on these large scale projects is a fundamental part to initiate the projects themselves. There are large pockets of liquidity, from international asset managers, regional players who like the space substantially and are now allocating more resources from an equity perspective into the region. Especially that we're moving away from the hydrocarbon type of PPP, more into the social infrastructure and into the greening of these various PPP projects. So projects such as desulfurization, which we saw from Aramco, has zero impact on profitability. Actually, it's a large cost on Aramco to go ahead and desulfurize both their gas and oil refineries. But we're seeing a large investment from these companies into greening their operations. Now, the substantial amount of, shall I say, financing that comes into these are still local banks in Saudi Arabia and the UAE. And we hope to attract more international banks to come and play a larger role as the pipeline for PPP projects is substantial. We're talking about close to $300 billion just from today till 2030 in Saudi Arabia in PPP, whether it's in green ammonia, blue ammonia, decarbonization, into the ports, storage, and then we're also seeing equity being invested into a higher risk caliber than what we usually know. For example, in the carbon capture space, we are seeing entities put equity into incubating technology that utilizes these carbon other than the usual way for enhanced recovery or for energy. So we are seeing a mix of things happening.
So, Lina, then what do you need? I mean, Luay just touched on so many initiatives happening in the region, but still international banks are shying away or not being bold enough in their moves. What is needed?
Yeah, it's the $1 million question. I think, if you look at traditionally how banking works, right? You're gonna have to look at, how am I gonna get paid? That's the first question any credit officer is going to ask you. What is your source of repayment? Now, if you look at things like projects like renewable energy projects, a solar project, it has a cash flow. It's got an offtake contract. It's it's very clear. It's very predictable. You kind of know the credit risk of the ultimate offtaker, and you assess it on that basis. It's very straightforward, relatively speaking. But when you look at projects where it's something like carbon capture, as you've rightly pointed out, or desulfurization, and a lot of these projects, they're essentially an extra cost to the company. But at the same time, it's like, where is the cash flow going to come from? A lot of times what we look at, so if you look at some of the newer technologies, so if we look at things like hydrogen, you look at even sustainable aviation fuel, it's a little bit behind hydrogen maybe, but even if you look at sustainable aviation fuel, or you look at some of these newer technologies and how you finance them, carbon capture included, it's very interesting to kind of look at the fact that it's not going to be structured from a banking perspective, from a deal structure perspective. It's not going to be the same way as the way that you would structure a regular oil and gas, for example, a refinery, let's say, the building of a refinery, let's say, or any of those types of project financing that we've typically been doing for years. So you have to, what needs to be done is several things. So one way of looking at it, there are several solutions that are being put in place, I think, and that's where this line of business is very interesting, because that's where you're kind of using a lot of creativity in And I know banking and creativity, but yes, it is like that. So, so you kind of end up looking at different options. So what are the options? One of the options could be potentially where you have a source of your kind of recourse goes to the entity. So if it's an Aramco, for example, potentially your recourse would be to Aramco, let's say. So how do you kind of utilize that credit or reliability of a certain company, where rather than relying just on a project risk from that perspective? That's kind of one way of looking at it. The second way of looking at it is by looking at things like where the public sector can play a role and can support with a whether it is de-risking type of ideas, for instance. And the third way is developing new markets and new ideas. So what does that mean? So the public sector angle, the second point, is more on kind of things like blended finance and how do you blend private and public capital, who takes what kind of risks, and sometimes you can even break down the risk in a way and just kind of split it up, because the appetite that a bank would have for certain risks is going to be different to the appetite that a World Bank can have, for example, or even a local public entity. So that's the second angle. Sorry, I moved back to it because it was an important point on the kind of the sharing of risks perspective. The third angle is the new markets. So things like the carbon markets and the role that they play. We're very well aware of the volatility of that market. We're very well aware of the controversies that come with it. But personally, I'm a big believer in that market, because if it really is done correctly, it can open up a lot of, it can unlock a lot of capital, and it can unlock a lot of bankability options. Because essentially, while you're putting a price on the fact that this company is incurring more cost to do something good, but at the same time, they're not being rewarded for it. So how do you reward them for it? You reward them potentially through, and I'm just kind of really now breaking it down to the simplest level, but you're rewarding them by having something that they can monetize through the carbon market. So developing what is needed is, how do we develop some of these markets in a way, so going back to your question on what do you need, how do we develop these markets in such a way that is transparent, that is credible, reliable? You're not going to wake up tomorrow to some scandalous story about how it's not being used correctly, and that's what regulations can provide, that protection around. What else do we need? We need to be more efficient. Going back to the point on working together with public entities or philanthropies, we need to be more efficient about making decisions, taking them further. Coordinating better, I think, is also very important. And last but not least, we need kind of just more creativity around these structures. And rather than look at things, in the conventional way of banking. We probably are not going to get very far. So we need to kind of go outside of that, to use the cliche of thinking outside the box. I mean, that's literally what we need to be doing more of, in my view.
Wow, that's fascinating. And Lina, she just touched on a point, Luay, that we need to get more creative here in our projects. We need to align them in a specific way that the banks, when you want to allocate capital, they know that this is a profitable business and not going to lose on it. Do you think, and this is why we are here for in this conference, do you think we are doing enough?
Well, firstly, the point, most of the PPP projects today are being launched by either sovereign, so these are government entities, Aramco, ADNOC, Oman, all the large players here, which I believe are the best credit ratings we can see in the region as a whole. So the comfort zone for these PPP projects, as far as credit worthiness, is already there. Mm-hmm. These are also the off-takers. I see your point of view on the carbon capture, but on like desulfurization and aspects like that, it is a take and pay. So your off-taker and ultimate guarantor, for example, for a better, it's Aramco, and I don't think anyone that is one of the best credits we have in the region. So there's about $30 billion worth of those projects, and still we're not attracting the immense amount of, shall I say, foreign institutions to come into the region. I think they can do much more. As far as putting together structures which are attractive or more creative, I do believe they're in a manner which are up to par with most international type of offerings, both in Europe and the US. So I believe there's a bigger play here, which we need more commitment from international banks to come and support the government-led and high credit-led initiatives, which we're seeing in the region right now.
Like you've been an investment banker before,
Yes.
your role now, and you've been there, you've been in Europe, you've seen projects over there. Is there anything missing here? Why we're not attracting these?
No, I just believe we are new to the game in the region. PPP has not always played a large role, especially our development targets for the country have never been as this aggressive and massive, both in upgrading entire infrastructures, A to Z, roads, hospitals. And our governments here have been very clear on our targets for 2030, for 2040. Even now we're putting up the plans. The only way we can actually do this growth is, previously it was all self-funded by governments coming in and putting in. But now that the PPP play is in there and we're new to the game, I just believe that we'll just further develop to make it more and more attractive. I guess, you know, Europe and the US have been there for decades, and we just probably started just 2 decades ago. So.
True, yeah. Lina, out of these 3 Ps, philanthropic, public, private, where do you see the share of philanthropic heading in the next few years?
So I think it's now. I think it's going to head into more activity from a philanthropic perspective. I think that the philanthropic side of things has quite an amount of untapped capital that is being more and more being added to the equation, or being committed towards being deployed towards environmental and social projects. I think the angle that's been missing is, how do you work hand in hand between the focus has always been public sector, right? The focus has always been, how can I make $1 of public sector mobilize $15-20 of private sector, right? That's kind of been the biggest focus. There's quite a lot of work happening in that space. There's quite a lot of forums and discussions and alliances that are being formed to address that. I think from a philanthropy perspective, we need to kind of pull them into that discussion as well, because in my view, I think there is quite a lot that can be done by getting philanthropy to also help mobilize private sector funding. And it also depends on where that philanthropic capital is coming from to a certain extent, because it depends on what is the speciality of that philanthropy. What are they focused on? What kind of technical expertise do they have when they're deploying capital to these? Because it's not like you knock on the door of a philanthropy and you say, I need money, and they give it to you, right? There's quite a lot of work that goes in the background to kind of lead to that deployment of capital. So I think we've got a long way to go. Like, I think it's a massive opportunity, and it would be a shame not to see it actually unlocking faster, and therefore I see it definitely. We will take anything at the moment that will help us mobilize capital, scale up capital, basically. So I think this is an area where a lot can be done. I think a lot of people know that. So yeah.
Wow, you operate in different geographies now. For Lamar, where do you see the best structure, especially here, whether it's in emerging markets or Middle East, to attract the 4 Ps?
I do believe today, from what I've seen out there, the GCC still remains, due to the large potential of opportunity which we have both on the social infrastructure and on what we have in regards to energy and greening of the hydrocarbon process itself to meet aspects such as the Paris Accord, to meet international standards. So we've seen various refineries here in the GCC put a substantial amount of capital deployment to desulfurize, to come to international standards so that the sulfur content is equatable to global expectations. I do believe there is a huge wave here of utilizing the PPP model and utilizing it for most of the programs that they're putting into space. So the establishment and rapid establishment of platforms such as the national privatization program in Saudi, the NIF, the National Infrastructure Fund itself, all of these have happened in such a short span, and they're very well interconnected to ensure efficiency in mobilizing capital, whether it's finance or equity, to ensure that the project pipeline, which they have put in place, gets scaled up in a very fast momentum to achieve those targets.
You know what, Luay, I meet lots of people, especially from the investors' perspective. Many of them are not really believing that we're going to reach our targets of 2050, 1.5 degrees Celsius and zero emissions. So tell me about your thoughts. I mean, this is out of context of the 4 Ps, but I mean, they play a big role in reaching or achieving this. So where do you think we're heading to?
Well, as far as I've seen, everything that the major contributors to the carbon capture program, for example, everything that possibly could be done, and I'm talking about now regarding Saudi, has possibly been put into place. They've reached out, they've put together the program, they have a very definitive target, which they have reached most of the targets and the hurdles for them together. So most of the milestones are there. Again, I go back to desulfurization. It was a huge thing that they went and they did all the oil refineries, and now are doing all the 7 gas refineries in Saudi at one time with a very aggressive objective by 2027. Saudi has committed to being sulfur compliant by 2028, and they're going to be there. So when you sit there and you actually see the programs that are coming into place, the people being hired and mobilized and platforms being done, amount of capex that's being deployed to put these structures in place to meet those targets, until it's not done, I'm saying we will reach those targets.
Amazing. Lina, you also have your own targets, but when you look at the wider picture also, do you share Luay's optimism?
So I'm optimistic, although I see some of the things that we're still doing sometimes that contradict with that, or where you see some of the people who are smarter than me, the scientists and all of that come out with with their concerns. And that is based on global calculations and the way that they look at things from a scientific perspective. But I think that a lot has been happening. I think we are on the right track. We shouldn't give up. We should still continue to innovate. Sometimes you kind of get a little bit pulled back by the fact that some of these investments or some of these technologies will take years before they can work. But the whole idea is to look at, is to kind of split it up, is to phase it out. It's where you have low-hanging fruit that you can address on a day-to-day basis. And then, where you are kind of investing now for the next 5 to 10 years, and then after that, beyond that to 2050. The way that we have been also approaching it internally within the bank is to look at, at literally breaking it down into numbers and setting targets for our different sectors. So the hard to abate sectors, how are we going to either phase out or phase in more or work together with our clients? So one aspect or one way of looking at things has been, okay, we turn off the tap. Not us, but I'm just saying in general, these are the options that you have. Turn off the tap. I'm not going to do any more. I'm just going to do green projects. It's unrealistic, right? So now you move on to the other side of the spectrum, which we chose to kind of go into. So we started looking at how do we help. We exist. We're a Standard Chartered Bank. We exist in the what I call the world's most interesting markets, because we are in emerging markets. We are in Asia, Africa, and the Middle East. They are so different. They're so interesting. Every market has its own challenges, but every market has tremendous opportunities. So if you look at some of these markets, there's no way that you cannot work with these markets who are very much willing. They want to do all of these things. They want to leapfrog. They want to go into sustainability. They want to do things better. Not from an economic perspective, but actually from the perspective of it. Actually, some of them look at it from an economic perspective and say it helps me become more efficient. But actually looking at how we can help them transition. And that's why transition. So we're one of the banks that has a transition finance framework, where we're looking at technologies and financing technologies that we are going to call or label transition and attract transition capital to it. And that's essentially where you're looking at technologies that are still going to be carbon emitting. They're not going to be completely green, but they are going to contribute. And at the same time, we have developed an ESG advisory setup, so where we're working very closely with clients on what they can do from different side of things. Implementation of strategies. How do banks look at you, and what you need to have internally in order to be more attractive to banks? What kind of transparency measures do you need in terms of reporting, disclosures, etc.? So yeah, these are the things that we are doing, and it actually makes me very optimistic that it's not just us; it's everyone who's on this ship.
Lina, I thank you very much. I mean, it was really valuable insights that you provided. I would love to continue this conversation. I think we have to keep this conversation going, especially out of these doors, not just here. Thank you very much.
Thank you. Thank you for having us.
Thank you.